Welcome back to FlexCandle, where we read the candles and flex the moves. I'm Flex, and today we're diving into a full top-down analysis on Bitcoin. We'll start from the higher time frames and work our way down to the lower time frames and see if we find any good setups. Remember, this is not financial advice. I'm not a financial advisor. You're responsible for your own trades. Always do your own research and trade at your own risk. Okay, let's hop into the charts. And as usual, we're starting off with the weekly. If you guys been seeing the episodes in the past couple of weeks, as you know, I'm bullish here. I have the pattern of the falling wedge, and this should be breaking us out to 117, 120. Right now, I feel like we're currently bullish because the stochastics are still on the way up. We broke above the 21-day moving average. We closed the candle there on Sunday, and right now we're still above the 21-day moving average. So as long as we can stay above 92,316 on the weekly close, we should remain bullish. If we head over to the 4-day chart, we see here we're starting to get toppy, but we still have a lot of room to drag across here before we really get overbought. We already have two candles that closed above the 21-day moving average, which is currently here at 87,749. In about 3 days, we have our third candle that should close there. If we were to fall down, then we must stay above 87,749 for the 4-day candles. Now if we go over to the daily chart, again, the 21-day average is getting close to crossing the 200-day moving average. Once this happens, this is going to be bullish. We're still on this flag. Today was a little bit scary. If you guys saw the market, we dropped all the way down to 92,900, which is pretty much what happened to us on Sunday, but we're bullish. Look at this candle. This is a bullish hammer pointing up. So far it's 4:30 p.m. Eastern time, and we close in about 3 hours and a half. So as long as we stay up here and this stays as a bullish hammer, we should be able to remain bullish. I would say 2 or 3 more days and this 21-day moving average is going to cross. Again, to remain bullish, we must stay above the 200-day moving average and the 21-day moving average. Here, the 200-day moving average is currently at 89,685. We head over to the 22-hour chart. We're falling down in the stochastics here. We still have some room to continue falling down, but look at this. We wicked off the 21-day moving average. This is very bullish to me. This is a nice flag. As long as we can remain up on top of here, again, we remain bullish. We head over to the 12-hour flag. We still got room to move, but I'm liking these wicks right off the 21-day moving average. We never broke this. The 8-hour yesterday, I left you guys around here, and it looked like we were pointing up. It looked like a little bit we were falling down, and we actually did fall down. I believe what happened was that the GDP for the US came out negative, so that scared everybody and they dropped the markets. I'm always telling you guys, the charts could be telling you one thing, but if some type of news comes out, it could easily drop the markets, which it did this morning, but that was some short-term stuff that happened. Overall, I still see us being bullish. If we head over to the 4-hour chart, we're starting to fall down. We're still gonna have to drag here a little bit, but if I put the patterns, as you can see, perfectly intact still inside of this flag. We fell below the 50-day moving average. We wicked back up right into the pattern, and we're currently at 94,700. So from 92,900 this morning back to 94,700. I mean, I would have to say that we're bullish. Again, we have to be careful. This could be a head and shoulder pattern that could play out. So if this were to fall down, we can't get too afraid. Measured move for this, if we do break down, could possibly bring us down to about 91, which would be the 80-day moving average. So 91,000. But 91,000 is still pretty bullish as long as we can maintain that. So keep that in mind, guys. We are in the flag, but there is a head and shoulder pattern that could play out there. Again, we could have dropped down today, especially with that bad news, and we didn't. The most they dropped us down to was only 92,900. So it doesn't look like the bears have that much strength at the moment. And we head over to the 1-hour chart. The 1-hour chart is on the way up in the stochastics. It looks like it could roll over, but this is actually the chart that saved us today. If you guys saw the episode on Sunday, we started losing moving averages on the 1 minute, on the 3 minute, on the 5 minute, on the 7 minute, on the 15, on the 30 minute, and the 45 minute was the one that held us up here on Sunday when we dropped down. I said if we fall down from the 200-day moving average on the 45 minutes, it's going to go to the 1 hour. We lose it there, it'll keep on going into the other time frames. Today, the 45 minutes did not help us. We we actually dropped below. We went to the 1 hour. We went below the 1 hour, and then right away we had a bullish candle go up, and we're currently above the 200-day moving average on the 1 hour, which is 93,970. If we would have lost that, then it would have been possible we would have went to this 200-day moving average on the 2 hour, which would have been 89,634. So right now we're trying to get back into the pattern. Overall, guys, I remain the same. I still think we're going to be looking at 100K Bitcoin pretty soon. We might have some up and downs depending on the news that might be coming out, but I think within this week or next week it's possible that we see 100K Bitcoin. One more thing, guys, before we go, on the daily chart there is something that we have to be aware about, and that is that we do see a little bit of bearish divergence here. Let me use a different color. And just so you guys can see, I'm gonna put it here in red, and as you can see, the price action here is moving up, but if you see the RSI, it's kind of flat. So this is bearish divergence. This could be why we started falling down, but it does make sense that the 21-day moving average is still below the 200. Remember, we need to cross the 200-day moving average to remain bullish. We could still drop down all the way down to about 88,000 and still remain bullish, and this is giving us a bearish divergence. The stochastics here are high, so it's possible we start dropping down. I wouldn't be afraid unless we start breaking the 200-day moving average and the 21-day moving average. There is some bearish divergence, so we do have to be aware of that. All right, guys, so that's the breakdown. If this gave you any clarity or a setup to watch, do me a favor, like, drop a comment, and subscribe. And if you have a stock or crypto you want me to go over, drop it in the comment section. This is FlexCandle, where we read the candles and flex the moves. Check you out in the next chart.